So since trendline breakouts are one of the best ways to trade the financial market, you can cash hundreds of pips just within a small particular period of time. Now many people turn out to trade the wrong breakouts, right? There are some breakouts which are wrong, and you end up losing. Okay, for instance, a breakout like this, right, is not the good type of breakout to trade. That's why you see that here price faked out and later on it closed above. But why a breakout like this is a good breakout to trade, I'm going to share with you difference, and I will share with you the difference between this breakout. I'll give you three indicators so that you should avoid being faked out. Three indicators that will show you how to determine the best breakout in this video. So in this video, you are basically going to learn the best way of trading, trend reversal breakout, and then see three indicators in which when you see those particular indicators, you take your trades. There is a high probability of you winning or cashing trades like this, all right, like this. Okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. So these are the three indicators that will give you a high edge or high probability of winning breakouts. All right, now number one, the trend of the market should be steep. All right, now when I mean a steep trend of the market, you see that there are some times where you draw your trend lines, they will not be as steep. So sometimes you draw your trend line, they will happen to be this steep. Let me say an uptrending market, maybe it will be this steep. All right, where you see price just react to the trend, maybe like this. Okay, you see maybe like this, and then price goes, it comes and reacts like this. All right, these are how some trending markets are, and this can be defined as a very steep trending market, whereas we have others that are gentle, very gentle trending markets, which are these. All right, you see that sometimes price will be coming, maybe rejecting to a zone, maybe it rejects. Okay, it goes for a while, it comes back, it reject, it goes, it comes back, and it reject. All right, these are all trending markets, but this is much gentle, while this is a very steep trending market. So in trading breakouts or reversal breakout, you have to ensure that this trend is steeping as this, right? I'm going to show you guys the difference in the chart, and you are going to see how steep trend lines turn out to break out more often, because gentle trend line like this, they tend to sustain a little more longer than steep trend lines. All right, so you see that it's easier to trade a steep trend line. Okay, now you have to ensure that there is what price reacting to a bigger support or a resistance. Okay, now there are some times where in looking for breakouts, okay, let's say you are trading in the 30-minute time frame, you might go to a bigger time frame, okay, like a 4 hours, let's just say 4 hours time frame, and ensure that price have hit a particular resistance or support. Now if you look at volatility 75, you see that this is a bigger the time frame, and you see that price has reacted to this higher, this lower high here. Now in the 30-minute time frame, you can easily look for breakout downwards, because from price reacting to this zone here, all right, at this breakout, now price could possibly move right down, because it's already reacting to a zone and it has to complete a particular phase in the bigger time frame. So you might want to complete an impulsive phase after a pullback in the bigger time frame, why we have what a possible breakout, because now there is pressure that is pushing this price down. Okay, so we also say if you ensure that there is bullish or bearish pressure. Okay, I'm going to bring you to guys more example. Now there are some times where you see a breakout and you have to ensure that the pressure is bullish. Okay, now look at this breakout. For instance, if you look at it, you are going to realize that there is a bearish pressure in this situation. What happened? We have price actually moving down with a very strong bearish candle that closed below this zone, and when price came back, what happened? We had another rejection candlestick, which is indicating what a bearish move around this zone here. Now if you look at here, we also had a breakout up here. Okay, you see that as price actually reacted to this zone here, which is a bigger zone, like I've showed you guys earlier, we had a very strong momentum candle. This was a very strong bearish candle that closed below this zone here, and if you are taking a sell trade based on that bullish momentum, you see that you would have probably caught a very big move just from understanding this simple concept, because they have what strong bearish pressure. All right, now let me show you guys now examples. Now I've explained to you guys ways in which you can draw trend lines. All right, and I've showed you guys many ways in which you could draw trend lines properly, so that you ensure that they are, you don't get faked out most times. Okay, so if you look at this market very well, you see this is an example of a very steep trend line or steep trending market. Okay, it's not as gentle as the one that I showed earlier. So you see that price is actually moving up, and this trend line is a little bit slanting upwards and somehow straightward. Okay, so from here now you see that at the breakout of this, there's a high probability of price moving right down, so you can cash hundreds of pips from this trading complete move like this. Maybe you cash a move right up to down, because as it has broken down from this zone, there's a possibility of price moving down. But now, first thing first, here if you look at it very well, you see that we had bearish pressure at the breakout. Okay, I've showed you guys how to draw trend lines. You simply connect the troughs or the wicks, you just make sure you get the touches and all of that. Okay, so now if you look at it here, you see that after price reacting here, we had a very strong bearish candle, which is another confirmation, guys. This is another confirmation. Okay, we have a number one condition, a very steep market, a steep trending market. Number two, we have what? Bearish confirmation. Now this bearish confirmation, we have a very strong bullish candle, a bearish candle, sorry. Now what you do in this situation is you place your sell here. Okay, there are two ways in which you can target in this situation. You can place your sell here, you place your stop loss above that candlestick that break out. Okay, this is the candlestick that break out, so you place your entry down here. Okay, then your stop loss above the candlestick that broke out. Okay, now you want to place your first target. Your first target should be at that previous low that led to this high here. Okay, because when price actually pulled back here, this was the low that led to this strong move up. So this is where your first target should be in this situation. So if you place your stop loss, your entry based on that, okay, if you place your entry based on the first way of targeting, you should enter like this. All right, this is how you should enter. That's how you should target your trade in this situation. All right, because there are times where price will get to the previous low, which is the first support at this instance, and then you see that maybe it moves back up. Okay, so you target like this. Now the second way of entering based on this, maybe you want to swing the trade. Okay, you might risk some few tens of pips or 100 pips to get hundreds of pips. Right, in this situation you can enter like this. When you enter, you place your stop loss above these highs. Okay, we place our stop loss above these highs. You want to target the whole swing of the market, which will be a trending market, a swing trade in this situation. All right, because this is okay. Now in this situation you target like this. All right, and then you could target like this, looking for these last lows here. Okay, you can only do this if you are already used to trending or trading swing or taking swing trades in which you can bear reversals. You'll be able to hold trades for this, because some of these situations, when price breaks out, what happens? You start moving now and creating what? Impulsive moves and pullbacks, impulsive moves and pullbacks, impulsive move and pullback, creating other trends. So you'll be able to bear this kind of retracement. You see price in deep profits, all of a sudden you see it reverses and all of that. So those are the two ways you can enter. After getting this confirmation, you are going to get high entries. Now let me show you the difference between the two examples that I talked about. Now if you look at this trend line here, this trend line is not the same like the first ones that I showed you guys. This one is gentle, more gentle. You see that when price hit this trend line, it takes a long while before it comes back to the trend. All right, so there's a difference between this is gentle sloping trending market. All right, and now if you are looking for breakout here, you see that you can easily get faked out. That's why you see that here we had a fake out, we had rejection here. When price rejected, it came down and broke through. Okay, so when it broke through here, what happened? It closed back above the zone. So suppose that you took a sell here, right? You would have easily been stopped out. Okay, I'm not saying that even with a steep trend line you will not get stopped out, but in trading you always try to increase your win rate. There are times where you take this slope or the steep one, you get stopped out. There are times where you can still take this kind of entry and price will still move in your favor, but we'll deal more on probabilities. There are times where you're going to get more wins than loss. All right, so that's the essence of trying to increase your win rate. All right, so you see that this now end up being fake because it is too sloping. Okay, why for this? You see that when it breaks out, though it pulls back, it still continue moving and the trend of the market continued this. Okay, this actually it moved, and you see that this is another example. After rejecting once, twice, thrice, it actually finally broke out. And when it broke out from there, you see that what happened, we had a bearish confirmation, we had a very strong bearish momentum candle. Now you see that initially at this first instance we could not enter here because this candlestick was not showing bearish pressure. You see there was a rejection with a strong wick down. Now you see that the next candle that formed now showed what strong bearish pressure. Price actually closed very far below this zone here. All right, now you see that you enter here with the first entry method, you place your stop loss above these rejection candles. All right, you see that these are the rejection candles here, and then you want to be targeting what these zones and these zones here. So you are placing your targets based on this zone. These are your first targets that you should be targeting. If you see very well, that's why you see that here price actually came and then got rejected. All right, you see that price came and then got rejected at this zone here before continuing or finally breaking out. All right, and from there you can see catch what continuation breaks and all of that. So that is how simple you can increase your win rate, and then you catch hundreds of pips just trading breakouts. Now you see situations like this, these are not sloping situations. That is why you see that in the conditions that I gave, we said the market has to be sloping, either upwards or downward, steep slope. So here we just have a cranky market, a choppy market here. You just ignore. Remember, trading is all about patience. You have to wait for the best trading opportunities like this. Okay, and then here in this situation you can take a sell. All right, and then when it's sloping you avoid it. Okay, here we have cranky, we just wait a little bit, and then we see a good trending market like this, you take your trade. So you don't need to win too many trades to be profitable. You can just catch a few good trades, and at the end of the week you are seeing that your profits are going to increase greatly. So remember, these strategies work for all markets because they are price actions, and it happens whether you are trading the forex, whatever market you are trading. So basically that is what I have for you today, guys. Thank you for watching. Make sure you share this video with other traders, and make sure that you join our free Telegram channel. I'm going to drop a link in this video's description below and also in the pinned comment, so that each time I analyze, you are going to easily get updated. Okay, so thank you for watching. Subscribe to the channel by hitting on the subscribe button and notification bell to see more content like this, and see you in the next video.